The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching out there. And Japan's Topix has risen above the psychological 3,000 point mark for the first time. Japanese household spending in June rising 1.3% from a year earlier, short of the median market forecast for a 2.6% rise. The US government has promised to amend a presidential executive order to remove overlapping tariffs on Japanese goods, this according to Tokyo's trade negotiator, after talks in Washington to fix what he called a, quote, regrettable error. And US President Trump's tariffs hitting India's garment makers as US buyers say to move production outside of the country. Let's get across all the technicals. Ilya Spivak from Tasty Live joining me. And Ilya, I just had a very in-depth conversation earlier about whether or not investors are too complacent about the risks, but it looks like potentially on the S&P technicals, we could see a pullback.
Very good to be here with you, Juliet, and that's exactly right. I think we've seen some really interesting price action over the past 2 weeks, and it really started last week with the US and EU deal on tariffs that seemingly got a positive response from the markets for a little bit, but then was faded. And then, of course, the situation again with the Microsoft and Meta earnings faded. And then the situation with U.S. jobs data, of course, changed the landscape completely. It was especially striking this week when the markets got two different measures of U.S. service sector activity, one from ISM, one from S&P Global, within 15 minutes of each other. The S&P Global much more positive, the situation in the ISM numbers much more negative, and they embraced the negative one and didn't even pay attention to the other one as though it didn't come out. So it looks like the markets are starting to really latch on to bad news as they ignore more positive news. Certainly the earnings data last week, the US-EU deal on tariffs, very much in the positive news column. And so we've established this peak here right around 64.58 or so, and we haven't been able to claw back to test that this week, though we can see from the chart here, not for lack of trying. Very obvious sort of failure at that attempt just today. So I'm looking very closely at this support at 62.41, underpinning the larger range here going back to July or so. If we can crack through that from here, we'd have, I think, a more substantial pullback in the cards.
Yeah, potentially looking at those numbers there. Let's have a look as well in terms of currencies, Ilya, and particularly what we're seeing with the pound after the BOE cut.
Well, that's right. So the cut, of course, was widely expected. And what came out was actually a touch more hawkish than anticipated because the conviction behind the cut was ultimately smaller than markets thought. We ended up having a 5-4 vote on the 9-member MPC. The expectation was that we'd have a much more convincing majority. The BOE, in a similar sort of state as the Fed, in the sense that they're trying to reconcile inflation that's going up, 17-month high there on CPI in June, and growth measures, the monthly GDP numbers, the most recent PMI numbers, that are starting to tilt towards slowdown. And so an interesting balance, this kind of stagflationary flavored policy conundrum here emerging. And what's really interesting is that the rate cuts up to this point from the BOE were really just catch up to where the Fed already was last year. The BOE is now to 125 basis points since they started. The Fed, of course, front-loaded 100 basis points last year. Looking out at this stage, the BOE is only expected to do maybe another 50 basis points through the end of next year, whereas the Fed, the markets have it out to 125, with most of it next year. So the outlook seemingly favoring the pound here. But of course, nevertheless, since the peak in July, it has been moving lower, and this most recent bounce on the slightly more hawkish BOE has kept that move intact. So the pound is apparently not able to make hay of a yield advantage, and that, of course, suggests some significant underlying weakness. So perhaps after this bounce, the next move is to come back down, and I'm looking at that support at 131.47 as a kind of a line in the sand, and if we can get through that again, then maybe we could be looking sub 130.
Speaking of making hay, what's happening with gold, particularly on these expectations that the Fed will cut?
It's been really interesting in gold because, of course, it had a very straightforward rally since the beginning of the year, very much in parallel with the U.S. dollar sell-off around the idea that this was going to be a big year for the Fed to cut. And, of course, a weakening U.S. dollar is almost always some kind of a tailwind for gold. But as we can see here, essentially from that April tariff scare, once that got digested onward, we're stuck in this very well-defined range. What's interesting here at the moment is that we're testing the top of that range because it seems like some of the negative economic data has given them a little bit more immediacy to these rate cuts. As of last week, before the jobs report, the markets weren't even sure we'd get one in September. Now, of course, it's right back on the table. So gold has rebounded. Also, we just had today the appointment of Stephen Miran, an ally of the Trump administration, into the vacant slot left by Governor Kugler, who's resigning. And so it's a temporary appointment, but it's one more dovish voice, one would surmise, on the FOMC. And so it looks like we might be on breakout watch here. If gold can clear these stops at 35.31, 35.85 here, we could be looking at the next big leg higher.
All right, we'll continue to watch. Ilya, thank you. Have a great weekend when you get there. Ilya Spivak there from Tasty Live. That does it for this edition of The Trade. Be sure to join us on Monday.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.